Good afternoon, everyone. Welcome back to our series of webinar. Like today, we are going to deep dive into the wealth guide, where we are going to cover multiple aspects of securing the wealth and getting the tax benefit, making a proper compliance and business structure. I'll take maybe a minute so that a few people are still joining, so they can join, and we will start exactly in a minute. Before that, if please let me know if my audio is visible, I'm audible, and the screen is also visible. If there is any difficulty, please let me know in the chat box. Yeah, so let's start. First of all, I would like to thank everyone who joined in this today's webinar. It's currently we are going through certain situations in UAE, and I really hope everyone is fine and safe. That's the main thing. And today it's a Friday. Of course, it's a Juma day. I know many people will be starting to proceed with the Juma things. And we will also try to cover at the earliest so that if anyone who is proceeding for Juma will not be getting stuck with our webinar. So today's agenda is to discuss on the holding structure and asset protection and how the tax benefits can be linked with the holding structure in UAE. That is the whole idea. Now, before that, yes, currently what is going on in UAE and other GCC countries. Of course, I have been away from social media. The main reason is that there is a lot of fake news are coming, which are so scary. But those who are in Dubai or in UAE in general must be knowing that there is no as such scary situations in the country. Businesses are operating as usual. Families are gathering. Even if the iftar sessions are going on, even the malls are open, cinemas are open, restaurants are open. Everything is operating in a very usual manner. And we are under the strong leadership of UAE, and we trust the government, and will be only the humble request to all of you is that whatever the news you are seeing, please make sure that you are reviewing only the news or the information coming from the government websites. They are updating what is happening around, and please do not get into any rumors or spreading of rumors, all these things, because we are very sure that there are certain websites, Ministry of Interior, NCEMA, all these websites are keep updating us on what is happening. So we just need to follow only the government updates. So without further things, let's see what is the roadmap today, what we are going to discuss. This is just a gist of what we are going to discuss in coming 1 hour. We will see the difference between holding companies and SPVs. It may sound similar, that holding company and SPV, but what are all the key differences in holding company and SPV, special purpose vehicle? And we are going to touch upon the difference between trust and foundations. This is again a misconception, okay, foundation is equal to trust or trust is equal to foundation, which is not. That also we will cover. And we are going to see when it comes to asset protection, what are all the favorable jurisdiction in UAE to have your structure in place. And any HNIs or global businesses who are looking for having their holding structure and looking for tax benefits, what are all the checklists, what are all the conditions, this also we will check. And when it comes to UAE foundation, there is a pass-through structure that foundation can be considered as a pass-through entity, which is otherwise called transparent entity. We will see that what are all the conditions, how to do that thing. And we will see the benefits of UAE in terms of double tax agreement signed by UAE with 140 plus countries, how we can use the double tax arrangements or double tax agreements for the tax benefits and making UAE as a hub for your global business. These are the primary agenda. So let's start with the first thing, that the difference between holding companies and SPV. I'll give you an idea to what is the purpose of holding company and SPV. The ultimate purpose is to hold asset. When I'm telling the asset, it can be shares, it can be the real estate, or it can be any sort of tangible or intangible asset. When it comes to holding company or be it a SPV, they both are for the purpose of holding the asset. Now, then why there is a difference between holding company and SPV? It is purely depends on the commercial reasons what a business owner is having. If someone is having holding company as a pure holding company and there is no further operations or planning, there is no plan of hiring staff or maintaining a physical office presence, then for the such investors, always a special purpose vehicle, which is considered as a passive holding company, is preferred. Whereas if a business owner is required to have a holding structure in UAE, and using this holding structure, they are going to have some other business operations also. As most of you must be knowing that if your entity is in a free zone, you can choose one of the business activity as holding. And you still can have other activities like trading, consultancy, all these activities. So it is a pure commercial decision whether you want to keep your entity as a pure holding entity or you want to add other activities also along with your license. If yes, your plan is to have other activities along with holding, then SPV is not a good idea. Always a normal holding company, either you can set up in any free zone or even it can be in mainland, the mainland activities, investment in commercial enterprises, or it can be in any free zone. Again, the next question is like, are you planning to hire employees under your holding structure? If that is the purpose, then again, the situation is that SPV cannot have employees under SPV. For that purpose, we need to have a normal holding company. As I told, it can be in free zone or in mainland. Then again, do you want to have a physical presence, having an office premise? This all matters when you are deciding when do you need a SPV or a normal holding company. Purpose is both of the holding and SPVs to hold the asset, but it depends on like what you're planning or what is your long-term goal. Now, when normal holding company have the option to add multiple business activities, having employees, having office, why someone should form SPV? It's a different question. SPV, we can form it in mostly in financial free zones like DIFC or ADGM. When we are having SPV in the financial free zone, there is a possibility of issuing different classes of shares. Means when you own a SPV in free zone and you want to attract investment from a third party, you can issue them a different class of shares. We can call it preference shares without voting rights. So you are still keeping your 100% control over your SPV, whereas you are issuing certain shares to the investors. This is possible in financial free zone when you are setting up a SPV. This may not be possible when you are setting up a normal holding company, especially when you are setting up it in any normal Dubai free zone or in mainland. So this is the primary difference between holding company and SPV. The purpose is same. And when it comes to SPV, why generally investors are using SPV? It is for the asset ring fencing. Think of a situation, a businessman is having multiple level of businesses. Let's say they are into manufacturing, they are into trading, they are into consultancy, they are into intellectual property. If they want to ring fence their asset, or if they want to ring fence their business, that one business goes wrong, it should not impact the other businesses, they bring the SPVs in the middle. And that will protect the liability from one business, against the asset of another business. So this is the overall view of the difference between holding company and SPV. Again, it depends on the commercial reason what you are having as an investor. Now, when it comes to trust and foundation, again, there is a comparison required. What is trust? Trust is very common and very familiar in countries, especially the countries are following common law jurisdiction. Example, UK or European countries, they follow the common law. And in common law countries, the concept of trust is very familiar. How the trust is working, that you are setting up a trust or you are appointing a trustee and you consider as a settler. And what you are doing is you are preparing a trust deed. And based on the trust deed, you are transferring all the ownership and control to a person who is called trustee. So you can think of a situation, you are appointing your family member or your friend or a third party professional as a trustee, and you both are drafting a document which is called trust deed, And based on the trust deed, the trustee will be holding the asset and he will be operating all the assets. This is the concept of trust. Trust is not a legal entity. Trust is by default, it is working on an agreement. Whereas when it comes to foundation, foundation is a separate legal entity. You can consider foundation as a combination of a LLC plus a trust. Means what is the purpose of trust? Asset protection. Can foundation do asset protection? Yes, it is possible. Can foundation have a separate legal entity? Yes, that is also possible. This is a thing when it comes to the LLC. LLC can have a separate legal entity. Even foundation also can have a separate legal entity. So it's a combination of, you can consider as a LLC plus trust. Whereas when it comes to the trust concept, it is a contractual relationship. You are entering into a contract with a and appointing a trustee. Now, when it comes to asset ownership in trust, the assets are held by trustee. Trustee, you are transferring the ownership of the asset to the trustee, and trustee will be managing it. Whereas in foundation, asset will be owned by a legal entity. Asset will be owned by a foundation. Means what? Like in foundation, unlike companies are having shares and shareholders, but when it comes to foundation, there is no concept of shares, there is no concept of shareholder. If someone is setting up a foundation, that person will be considered as a founder, and founder can gift all the assets, whether it is tangible or intangible, movable or immovable, to the foundation, and foundation will own all these assets. And there is a different set of people who are part of foundation, which is called council members. And council members are the people, you can consider council members as the directors of a company. They will be doing the day-to-day operations. They will be taking the day-to-day decisions. And there will be a document called charters and bylaw. And the founder will be writing the charter and bylaw based on his wish that during the life of a founder, who should be getting the benefit. God forbid the founder pass away, like who will be the beneficiaries. All these are documented, and based on this document, council members will be acting it. In the main difference here it is that in a trust, the trustee is becoming the legal owner of the asset, whereas in foundation, no one is a legal owner. Founder is transferring the asset. Founder is not a legal owner. And the beneficiaries will be getting the benefits as per the bylaw and charter prepared by the founder. Third thing, when it comes to privacy, obviously trust have more privacy because trust is not a registered or a legal entity, that it's a contractual obligation. You are appointing a trustee and you are signing a contract which is not getting registered anywhere. So it has a more privacy, but when it comes to control, it has a less control. So the situation that you transfer all the assets to the trustee and trustee is controlling it, that means you are having less control. Especially certain countries are having a concept called shams trust. Means if you appoint a trustee but you still have your control, then those trusts are not getting validated. It's altogether a different thing. So the topic what we are discussing here, it is that when it comes to trust, it has a very high privacy because it is not a registered entity, whereas a foundation is a registered entity. So obviously the details of a foundation will be with the authority. But again, when I'm telling it is, I'm not meaning that it has no privacy. We cannot find the details in a public domain about a foundation, who is the founder, who all are the beneficiaries. When it comes to foundation also, the bylaw, which is the document of a foundation, it's a private document. We don't need to submit the bylaw to any bank or any authority, even to the DIFC authority. We don't need to submit the bylaw, but it's a registered legal entity. So obviously the authority knows that the arrangement is in existence. When it comes to control, the settler delegates to trustee. Means the settler is giving up all the control on the asset, and the trustee will be having the full control. Whereas in foundation, the founder is influencing via council. What does that mean? A founder can also become a council member. So if you can think of a situation, if you are setting up a foundation, you can be a founder, you can be a council member, and you can be a beneficiary also. Still, it's a valid structure. The reason is that it's a separate legal entity. Whereas in trust, if you cannot have this things in place because you are involving a third party and giving off the control of your assets to that third party. So what is the main differences? These are the four main differences when it comes to legal status also, ownership also, privacy also, control also. When now let's discuss on where we can set up the holding structure or the foundation structure. What we have discussed, we can do it in any jurisdiction. Let's say you want to set up a holding company in a normal free zones like DMCC or Jebel Ali or Maidan. Is it allowed? Yes, it is possible. Even in mainland, you can have. But when it comes to a foundation can be set up in only limited jurisdiction. What are all those limited jurisdiction? ADGM, which is in Abu Dhabi Global Market, DIFC, which is Dubai International Financial Center, which is located in Dubai, and in Ras Al Khaimah, which is Ras Al Khaimah Investment Corporation. This is RAK ICC. These are the three jurisdictions where the foundation can be set up. There is no confirmation that whether DMCC also will bring with this structure, but there are talks going on, but there is no official confirmation on DMCC, which is bringing a foundation structure. Now, obviously, the next question will be where? It in the ADGM or DIFC or RAK ICC? Again, going back to the commercial decision, as an investor, where you are more comfortable. If you are living in Dubai, your assets are located in Dubai, then the DIFC is more feasible. If you are living in Dubai or most of your assets are in Abu Dhabi, then Abu Dhabi Global Market ADGM foundation structures are recommended. And RAK ICC is mainly for those people who are looking for a cost-effective structure or cost-effective setup. RAK ICC is how RAK ICC is working is that RAK ICC has a memorandum of understanding with Dubai International Financial Center that whatever the court-related procedures are there, they can follow the DIFC code. So it's working on a memorandum of understanding. It's again a commercial reason how you want to set up where your assets are located. Are you concerning on the prices? What facilities you require? Based on that, you can choose either of these three jurisdictions. So this is about it. Now, when it comes to holding company also, in DIFC also you can set up a holding company. It can be active holding company or it can be a passive holding company, which is special purpose vehicle, SPV. ADGM also having the same facility. Even RAK ICC is also having the same facility. You can have the holding structure also in the same jurisdiction. Now, why only these three jurisdictions are preferred to have the setup? The main reason is that these three jurisdictions are following common law. When I'm telling common law, DIFC and ADGM, they have a direct common law framework, whereas RAK ICC is having the access to the DIFC court to do the procedures as per the common law. Under common law, it's a different court. The procedures are different. It's an English-speaking court. Everything can be, all the documents can be submitted or done in English. All these facilities are there. Being like a country which is having like more numbers in expats than Arabic-speaking people or UAE nationals. Many investors are comfortable to have the documents and every procedures in English. If that's the situation, then you can have your holding structure in English documented code like DIFC or ADGM. Versus if you are planning to have a normal holding, that is also, as I explained to you, 100% fine. Again, depends on what you are trying to aim. Now, the next thing what we want to discuss is on the taxation thing, which is I know like it's a topic of the day, how we can save taxes having a structure in UAE. First thing we need to discuss about UAE taxation. Then we will discuss on how the international transactions can be benefited under the UAE framework. So first of all, when we are having a holding structure, we need to see that where we are having the holdings. If your parent company or the holding company is in UAE, which has subsidiaries inside UAE, then whatever the dividends your parent holding company is receiving is exempted from UAE corporate tax. There is no corporate tax applicable on local dividends. This is the first point we want to understand. Now the questions can be, what if the dividends are coming from outside UAE? Is it exempted from corporate tax? That is also exempted from corporate tax, but there are certain conditions. So these conditions required to be met in order to get the exemption. What are all those conditions? Condition number one, the UAE holding company should have minimum 5% of ownership in foreign entity. When we are telling 5% ownership, it should have automatically 5% voting right also. And the UAE holding company should be eligible for 5% of liquidation proceedings also. If the foreign subsidiary is getting liquidated, whatever the asset left over, UAE holding company must be eligible for 5% liquidation proceedings. So these three things, 5%, 5% shares, 5% voting right, and 5% eligibility for liquidation proceedings must be, these conditions must be satisfied. This is the first condition to get an exemption on corporate UAE corporate tax for the foreign dividends. Second condition, that UAE company must hold the shares for a minimum period of 12 months. Why this condition is there? That when UAE is telling that, okay, if you are getting a foreign dividend, it is exempted from UAE corporate tax. It should not be used as a tax planning or for a tax advantage, that someone is setting up a holding company in UAE and they are making the UAE holding company as a shareholder in let's say in a UK company. And the dividends are started coming, and once the dividend we receive, we are immediately liquidating the UAE holding company. So the condition they put that there should be a minimum 12 months holding period. The shares must be held for a minimum period of 12 months, or the holding company must have an intention to hold for an uninterrupted period of 12 months. So either it should be practically held for 12 months, even if they didn't practically like doing the holding for 12 months, they should have a clear intention that yes, we are going to continue our holding for 12 months, minimum 12 months. So this is the second condition. Third condition, the dividends are coming from a foreign country. So the dividend is always, it is after tax. So let's say the dividends are coming from UK. So already the UK corporation tax is paid, and after that only the dividends are coming to UAE. The idea of 9% minimum subject to tax is that the dividends are coming from a country where they have a minimum 9% taxation in that country. I'll give an example to you. If you are getting a dividend from UK, your UAE holding company is getting a dividend from UK. That means UK has more than 9% corporation tax. They have 22 or 23%. Whereas if your dividends are coming from, let's say, Cayman Island has no corporation tax. That means the income is, of the Cayman Island is not taxed in that country. If not taxed, that means it is forfeiting the conditions to get the exemptions. So when you are setting up your holding company, you need to have a clear understanding that yes, my holding company is going to get the exemption. If to get the exemption, you need to have minimum 5% ownership. You should have a clear idea of holding period of 12 months. And the shares are held in a country where there is minimum 9% corporate tax. If these conditions are satisfied, then your foreign dividend or foreign capital gain from when you are selling the foreign subsidiary or foreign shares will be exempted from UAE corporate tax. There could be a situation if someone who is not holding 5%, or let's say the dividends are coming from a country where there is no minimum 9% taxation. The example what we discussed, the dividends are coming from Cayman Island. What could be a backup option for that? That is the qualifying free zone benefits. So it can be a backup when you are having a holding structure. In case if you are not satisfying the conditions of 5% holding or minimum subject to tax 9% condition. How the qualifying free zone benefits are working? UAE has officially announced, and it is up and running, that free zone companies can be benefited from a 0% corporate tax subject to conditions. So the conditions, there are multiple conditions. I don't want to get into those. Then we will deviate from holding to the qualifying free zone things. But to give an understanding that the free zone company need to be maintained and managed from UAE, this is one thing. Second thing, the free zone company must submit the audited financial statement. Then the free zone company need to have adequate substance. Substance means they need to be physically present in the free zone. It should not be a shell company. Then a free zone company need to maintain the transfer pricing in case if they are dealing with their related party companies, they need to maintain the market value for the transaction. So there are few conditions. So free zone company is holding shares inside UAE or outside UAE. Then when they are getting dividend, if they are not fitting into the definition for exempt income, they can try for a qualifying free zone benefit. When it comes to qualifying free zone benefit, the 5% conditions are not there. The minimum 9% subject to tax conditions are not there. Instead, they kept the 12 months condition that the shares must be held for a minimum period of 12 months. And the free zone company should prove that it's not a shell company. They are physically present in free zone in terms of decision making, and physical presence can be through capital expenditure spent in free zone or operating expenditure spent in free zone. So this can be kept as a backup rule. Whenever you are having this structure, first thing is whether your income is eligible for exempt subject to the condition what we discussed. If yes, we don't need to get into the qualifying free zone benefits. We can directly go for the exempt income benefit. If it is not happening, then the backup thing is having a qualifying free zone benefit. Of course, the conditions required to be satisfied. These are the two ways we can handle the holding structure, either exempt income or as a qualifying free zone thing. Now, the next thing is on the pass-through of foundation. So this is again, I need to give a little bit background of how the foundation's taxation is working. Then we will come back to this particular point. As you all know that UAE, I mean, there are telling in two ways. Some people are telling that UAE has no personal income tax. I'll say UAE has taxation on businesses, and when that business is done by a company or an individual, that both the things are subject to UAE corporate tax. So it's not that there is no personal income tax. Three things are excluded for an individual from UAE corporate tax. Only three things. What are all those three things? One is their wages. If any person who is getting their employment income, it can be salary, bonus, commission, end of service benefit, or any kind of other benefits from a company as against their labor contract or their employment contract, that is not considered for corporate tax. This is the first income which is excluded from UAE corporate tax. Second thing, if any individual who is getting their income from their real estate investment, it can be rental income or it can be the income they are generating when they are selling the residential property or commercial property, then that income is not considered for corporate tax purpose. Third thing, any personal investment. It can be any personal investment. They have investment in shares, investment in bonds, stocks. It can be anything, or investment in crypto. Any personal investment, if an individual having any sort of personal investment, this in the gain or the capital gain or the benefits received from such personal investments are also not considered for corporate tax. Apart from these three things, if any other income an individual who is getting, that is subject to UAE corporate tax. So the idea what I'm trying to explain to you is that it's not that there is no personal income. Apart from that, if let's say an individual who is working in UAE as a freelancer and he is getting some sort of freelance income, which is not fitting into the definition of employment or real estate investment or personal investment, then obviously that income is considered for UAE corporate tax. How it is considered, it is explained in a cabinet decision. There was a cabinet decision published in the year 2023, the cabinet decision number 49 of 2023. There they told if an individual who is getting any income other than these three income what we have discussed, and if that income is exceeding more than 1 million dirhams in a year, then that individual is subject to UAE corporate tax. So they have first told like remove three things. Second thing, even if after removing this wages, real estate and personal investment, if still your business income, whatever the other income you received, is below 1 million dirhams, you are still outside the scope of UAE corporate tax. But the moment the other income is exceeding 1 million dirhams, then that individual will be subject to corporate tax registration in the personal name and the person required to file the corporate tax return also. This is about the individual structure. Now I'm coming back like to the foundation structure. The UAE corporate tax law it's clarified through Article 17 of UAE Corporate Tax Law that a foundation can consider as a transparent entity. How it can consider as a transparent entity? First thing, like, any investor who is setting up a foundation in UAE, first thing is that they have to register for corporate tax. Regardless, they started their operation, they opened their bank account, whatever things, anything they have done before that, first thing what a foundation or any legal entity must be done in UAE is that registering for corporate tax and getting a corporate tax registration number. Within 3 months from the date of incorporation, the registration application must be submitted. Failure to do that, there will be an administrative penalty of 10,000 dirhams. So step one is getting the tax number. Once the tax number is received, the foundation can put an application to the authority, which is Federal Tax Authority, UAE Federal Tax Authority, that I want to treat my foundation as a transparent vehicle. What does that mean? That don't tax my foundation, tax me. That is the application which is explaining. If the UAE tax authority is approving this application, then foundation will not be subject to corporate tax. Instead, the individual will be subject to corporate tax. Now, if we are discussing when an individual will be subject to corporate tax, that individual is getting any business income. And what foundation will be getting? Foundation will be getting either the income from real estate or the income from the investment. So the income will be not taxed in the hands of foundation also, and will not be taxed in the hands of individuals also. It's a unique model that through the application, the foundation can get the tax transparency. And once the foundation is getting the tax transparency, the foundation is not taxed and the individuals are also not taxed, because the cabinet decision published that 3 things are excluded for an individual for corporate tax purpose. Now, is it that every foundation can apply for this tax transparency? Again, they have specified the conditions in Article 17. What are all the conditions? Condition number 1, that the beneficiaries of a foundation must be individuals. So it should not be like an entity or a company, or we are keeping another trust as a beneficiary. That is not allowed. The beneficiary must be individuals. Second thing, the purpose of foundation is to hold the asset and getting the benefits out of the asset. Foundation can, as I explained to you, can hold any sort of asset, and the purpose of the foundation must be holding of asset. Third condition, foundation should not conduct any active business. That is the third condition. Fourth condition, the foundation purpose of setting up a foundation should not be a tax evasion. These are the 4 conditions. As long as a foundation is satisfying these 4 conditions, they can submit an application to the UAE Federal Tax Authority explaining that I would like to get a tax transparency for my foundation. And once Federal Tax Authority approve that application, then foundation will not be submitting any corporate tax return. Instead, they will be submitting an annual declaration every year that they are still satisfying the conditions, whatever the 4 conditions what we discussed. The foundation should submit the annual declaration. So when we are checking the pass-through condition, why we need to check this pass-through condition? We already discussed in the previous slide that the foundation is getting dividend or capital gain when they're selling the shares. It can be either fit into exempt income, or it can be considered for qualifying free zone, all these things. But apart from shares, maybe the foundation will have other assets also. Maybe the foundation will have real estate under them. They will have a different sort of holding, IP, intellectual property they have. They are getting some sort of royalty income. If it will not fit into the exempt income also, it will not fit into the qualifying free zone also. If neither of these things are not working, then it's again a third option investor can think, that putting an application to tax authority to getting a pass-through. If the pass-through application is approved by tax authority, then neither the individual nor the foundation will be paying any corporate tax on the income generated by foundation. Now, UAE Federal Tax Authority or Ministry of Finance have further extended the pass-through facility through a ministerial decision, and they clarified that if there is a holding company which is 100% owned by a foundation, And holding company is also satisfying the conditions. We discussed the 4 conditions. What the condition of individual beneficiaries, purpose is holding shares and not getting into any active business, and the purpose is not corporate tax evasion. If these 4 conditions are satisfied by a holding company, which is 100% owned by a foundation, then the holding company can also apply for tax transparency. Why it is very important? If you are planning to have your holding structure in UAE, you can put a family foundation on top of your holding company. Then you can apply tax transparency for your holding company also, your family foundation also. So then the holding company also will not pay any corporate tax, and the family foundation also will not pay. And as an individual, the individual beneficiaries are also not subject to any taxation in UAE. So it's a, as I told, it's a very unique model. If you are having any confusion, how does the mechanism work, or how to do the application, like have you done it before, all these things, or if you want to know more about these things, we can always connect one-on-one. We can reach out to me and we can discuss on that. But before that, it's very clear that the corporate tax registration is mandatory. This is again a misconception that I will get a pass-through automatically. No, first need to get the tax registration number, and pass-through will be coming only through an application to Federal Tax Authority. So this is about foundation. And one of the benefit of foundation is this tax transparency. Honestly telling, I'm not excited for tax transparency when it comes to foundation. Foundation is a very unique tool for your asset protection and your succession planning, legacy planning. Because any individual who is owning the asset in their individual name, it is always, there are multiple risks. Risk number 1, if a person is getting any personal liability, that is going to be settled against the assets of that person. So if the person has any assets in the personal name, that asset is exposed to the personal liability. Second thing, in the event of a death of a person, then a court probate will be happening, and the court probate can be based on the person is a Muslim. If it is Muslim, it can be the Sharia law will be applicable. If it is a non-Muslim, whether the person has written a will, and it is what is written in the will. But again, the will also will go through a court probate, and based on the court probate, the asset will be passed to the next generation. And it can take a good amount of time, depends on where you have registered will, how fast you are submitting the documents to the court, all these things. But think of a situation, you have an operating company, and you cannot think of stopping an operating company not for even one day. When it comes to foundation, if foundation is the owner of your operating business, or foundation is the owner of your property, your other assets, foundation cannot die. That is, of course, it's a legal entity, it cannot die. And even if the founder pass away, automatically based on the wish list, which is, we call it bylaw of the foundation, the asset will be transferred to the next generation. Who will be doing it? It will be done by the council members appointed by the founder. So it's a very unique model when it comes to the asset protection and succession planning. So this is about pass-through thing. We have already seen about the individual position. Now, this is again, like when we are telling the UAE is giving tax benefit, exempt income benefit, qualifying free zone, pass-through benefits. This all things are coming under the corporate tax. When it comes to VAT, we need to always keep an eye on VAT also, because VAT is based on the goods and services. Let's say you are setting up your holding company in UAE, and that holding company is going to hold the shares, let's say inside UAE and outside UAE. Then in that situation, when the dividend comes, dividend is not considered as a service. So that holding company does not require to get a VAT registration. But that is not the case when you are having other sort of assets under your holding company. You always need to consider the VAT position also. It can be equally applicable for foundation also, holding company also. I'll give an example. If your holding company is holding a commercial property inside UAE, and that commercial property is giving you a rental income of more than 375,000 dirhams in a year, then the holding company or foundation has an obligation to register and get the VAT number. And whenever you give it for rental or selling, you have an obligation to charge 5% VAT on that. We cannot tell it's owned by a foundation. Foundation is a natural person, the tax transparency applied, nothing is applicable. VAT is specifically on goods and services. So this can be one thing. Second thing, if a foundation is owner of a patent, let's take an intellectual property situation. If the foundation is owning a patent and that patent is given to, example, UK for usage, and UK company is paying them a royalty, and the royalty income is considered as a taxable supplies under VAT. Since the UK company, which is a foreign company, the VAT percentage may be 0%. But even if you are having a 0% VAT supply, you have an obligation to register for VAT and report it on a quarterly basis. Regardless you pay or not, the requirement is to register and report on a quarterly basis. Another example, if the foundation or holding company is having residential units in UAE, residential properties owning under their name, residential properties are exempted from VAT. So if the properties are residential, then no need to get into the VAT registration. So VAT, always a separate analysis is required in order to make sure that one side you are so sure about the tax benefits and everything, but other side there is a gap of VAT. So both are equally important. Now, moving to the next thing, which is on the international transaction. So far, what we have discussed, which is VAT, corporate tax, all these things is within UAE. But when it comes to the holding structure in UAE, this is for me personally, this is my very special area, or I'm very much interested when it comes to the cross-border transactions. UAE has signed 140 plus double tax treaties, and many double tax treaties are maybe still under discussion or signed but not yet published. UAE has a very extensive double tax treaty framework, which a business owner who is having a structure in UAE can be utilized. I'll give an example to you. If a UAE holding company is holding shares of a UK company, and a UK company is paying dividend from UK to UAE, of course, whatever the corporation tax they have paid in UK, after that, the dividend should go to the shareholder. Shareholder is a UAE company. Most of the countries are having a withholding tax concept. What is withholding tax concept? When you are remitting the dividend from UK to UAE, UK has an obligation to hold certain percentage of the dividend and transfer the balance. Let's take an example, 20%. But the DTA, which is double tax treaty signed between UAE and UK, is giving the benefit that the withholding tax rate, both the countries agreed, it is 0%. Means your 100% dividend will come from UK to UAE without having any withholding tax impact. Now, once the dividend is reached in UAE, we already discussed how the tax benefits can be done. It can be either we need to check the exempt income or qualifying free zone benefits or pass-through entity benefit. So this is one thing. Like that, if you are checking, there is a double tax treaty with Luxembourg. Luxembourg is telling that if dividend is transferring from Luxembourg to UAE, the withholding tax is between 0 to 5%, a very nominal percentage. Netherlands double tax treaty is also giving the benefit that if the dividend is a qualified dividend, means the UAE holding company is a beneficial recipient of the dividend, then the withholding tax rate is 0%. We need to analyze this part also, where you are going to have your holdings. Your holdings are in Europe. If it is Europe, which country? UK, India, or other GCC country, where you have your holdings or the assets you are having. We need to analyze each double tax treaty and structure it in a way that we are getting the maximum legal tax benefits. So the double tax treaty also, we need to take it into consideration. Now, this is the last part, which is on the family office structure. UAE is very familiar and famous for having family offices. How the family offices are working? So far, we told we have a foundation. Foundation is for asset protection, legacy planning, business continuity. We have holding structure. We discussed active holding, passive holding, SPV, all these things. The concept of family office, there are single family office also, multiple family office also, SFO and MFO. If a family want to have a separate office to manage their family businesses, they can take the license of a family office. What the family office will be doing, their purpose will be handling the business of the family. Think of a situation. You are you and your brother and your let's say your wife is having a separate business, your parents are having a separate business. Everything is in UAE. You can, or outside UAE, you can set up a family office in the UAE to manage the business of your family. Under the family offices, you can take a physical office, you can take employees. And what is the income of the family office? Family office is charging the foundation or holding or operating companies, which is coming inside the family group on the market value, which is otherwise called arm's length value. Means they can basically decide how much fees can be paid to the family office. Uh, because there is a common control, the authority is telling that the family office need to charge on a market basis. A fair amount need to be charged. So this is the last part. The UAE is well equipped with the family office structures also. You can have your foundation family office to manage the foundation's asset, and you can have the holding structure to manage the operating businesses also. Now, I would like to take some questions from the chat box. Of course, you can ask any sort of questions. If you have, you can put it in the chat box. And if any questions which are not answered, you can reach out to me. I've given the link for our website, WhatsApp, and we have a dedicated WhatsApp community where we always update anything related to the regulatory changes or any taxation, any updates coming from the tax authority. We always make sure that we are updating our clients through our WhatsApp community. So the barcodes are given, and of course the email address and our office mobile number, everything is given. You can make a note of it. Meanwhile, let me check the chat box for the questions. I have the first question that can a foundation hold foreign asset? Foundation can own UAE assets also, foreign assets also. There is no restriction as say like UAE is giving that you can your assets must be located inside UAE. But again, it's a subjective question, because when it comes to real estate, certain countries are not allowing a foreign entity to hold the asset. If I give an example to you, example in India. India, a foreign entity cannot make an investment in real estate. There are one or two exceptions, but in general, it is not allowed. Another example, if I'm giving Singapore, they are allowing the foreign entities to hold the real estate, but the transaction fee, the stamp duty, whatever we call it, it is very high. It is, I believe, it is 67%. So you need to always check when it comes to real estate, is that the foreign countries allowing. UAE has no issue. UAE is 100% allowing the foreign entities also to own the real estate. Tax transparency to be applied every year. Tax transparency, as I told, it's an application that will come after you register and get your tax number. And once you apply, it is go for FTA's approval. Once FTA approved it, every year you need to submit a declaration that you are still maintaining those 4 conditions what we discussed. So the application is once, but the declaration is annual. Again, to add it, when the declaration required to be submitted, the deadline is same as the corporate tax return deadline. Corporate tax return deadline is 9 months from the end of the financial year. The declaration deadline is also same, 9 months from the end of the financial year. Can foundation issue visas? Foundation can issue visas if the foundation has a physical office inside, like particularly talking about DIFC. If you have a physical office inside the DIFC and the foundation is taken under that physical office, then yes, foundation can issue the visas for managing the business. But again, on a larger scale, I always recommend to have a separate family office rather than taking visas under the foundation, having a separate family office. Why it is like that? You can contact me. I'll explain to you what is the rationale behind it. What would you suggest, forming holding company or foundation? Which one is more beneficial? It's It's not like, it's a reciprocal thing. Like, I mean, if you have foundation, you don't need holding company. You have holding company, you don't need foundation. Both are having different purposes. Think of a situation, you are having a holding company and you are the owner of the holding company. You are still 100% owner of that holding company. Holding company may have different assets, let's say operating company or other assets. Anything can be under the holding company. But you as an individual, still owner of the holding company, is forfeiting the purpose of asset protection. Tomorrow, you get some personal liability that is going to have impact on your asset. What is your asset? Holding company. What is holding company's asset? Underlying companies. Whereas in foundation, there is no concept of shareholder, there is no concept of shares. You are giving up, transferring your asset, and the asset is owned by the foundation. So the purpose itself is different. We cannot, compare both the things, which one we want. It is again based on the situation. But always, if a person who is looking for asset protection, inheritance, and legacy planning or business continuity, 100% foundation is the right structure. But again, foundation, I don't recommend in general foundation owning shares of a operating company. I always say there should be a holding structure in the middle. The next question, what is the process for liquidating or dissolving a foundation and holding company? What happens to the assets or investment if the foundation and holding company ceases operations? Foundation and holding company, as I told, it's a separate legal entity. You need to have a trade license. You will be running it as a normal, company. Every year you will be renewing the trade license. And what is the process? It is the holding company's process is as good as you are liquidating the other company in which jurisdiction you are located. You need to appoint a liquidator. You need to settle all the assets and liabilities. If you have any visas under the holding company, you need to cancel it. And you need to get a clearance from the bank that the bank accounts are closed. Some zones are asking the newspaper advertisement. If it is there, the newspaper advertisement required to be done and it can be dissolved. And when it comes to foundation, it's called striking off a foundation. You need to submit an application to the registrar that we want to strike off the foundation. Then who has the right to strike off the foundation? It is again depends on who has the power which is given by the founder through the charter and bylaw. When the strike off is happening, the assets will be transferred to the beneficiary. There are two types of beneficiary: default beneficiary and qualified beneficiary. Qualified beneficiaries are people who are getting the benefits. Default beneficiaries are people who are getting the assets. It both can be same person. Depends on in the charter or bylaw who is the default recipient. Upon strike off of foundation, the asset will be going to the default beneficiary. Oh, Mehvish is telling the screen is black. I'm sorry, I don't know. Is it for everyone or is there still issues there? I'll continue. I'll take a couple of questions more. Sorry. Can a holding company opt for tax transparency without having a family foundation above it? It's a very good question. See, the concept of tax transparency is given for family foundation. So family foundation can apply for tax transparency. Now it is further extended to the holding level that if a holding company is 100% owned by a family foundation, then that holding company can also apply for tax transparency. First, then what they need to do, then the foundation required to apply for tax transparency and get it approved and submit to Federal Tax Authority that, hey, I have a foundation. I got tax transparency application approved from FTA. Now I have a company under the foundation that is also satisfying the conditions what we have discussed. I need the tax transparency for holding also. The bottom line is that the 100% ownership of the holding company must be with the foundation. So foundation is mandatory. What can you see in your WhatsApp community? So what you can do is maybe you can visit our website, flyingcolortax.com. You will find in our website a link for join WhatsApp community. Clicking in that link also, you can join. So just wanted to stick within 1 hour only. That's why let me wind up today's session. Any question if you require any particular situation you want to discuss, to have all the structures what we have discussed today, you can always reach out to us. We'll be more than happy to guide you on your asset protection or holding structure or whatever topics what we have discussed. As I told, like Flying Color is a group of company. We are a 21-year-old firm located in Dubai Media City. We are into different verticals of businesses, starting from setting up of company in mainland, free zone, offshore, then opening the bank account, getting the visas, trademark, all these things are taken care. On the other side, we are taking care of the taxation, compliance, accounting, audit part also. That is also coming under the scope of Flying Color Group. We are like a real estate authority, approved real estate broker, dealing directly with the leading developers in UAE. Also, we are into the second citizenship programs, primarily focusing in the Caribbean island country for the second passport. And we have our company or the license in DIFC also, where primarily we are focusing on the asset protection, trust, foundation, will registration, regulated licenses. All these things are done through our DFC entity. And Flying Color Tax Consultant is a registered tax agency with UAE Federal Tax Authority. Means we can officially represent our clients, talk on behalf of our clients. We can give that representation during any tax audit. We have qualified tax agents within our organization who can take care of your tax matters. Anything, anywhere you require any sort of assistance, we'll be happy to assist you. And thank you once again for joining in today's session. We will continue in the next month also with a different topic. We'll be announcing it through our social media. Please make sure that you are following our social media for further updates. And wishing you a happy Friday, happy weekend, and take care and be safe. Thank you.